JJ the CPA here. Hope you're doing well. Wanted to visit with you about tax planning for year end, in part related to the PPP tax adjustment. Now, I am going to put a couple of links in the body of this email. The first you will see to this tax seminar that I'm putting on December 13th, Sunday, just a one-time only. But I'm also going to put a link to a playlist talking about the PPP tax adjustment, so check that out. I'm going to walk through with you some ideas for year-end tax planning, but full disclosure, I'm basically going to tell you what you need to do. I'm going to tell you what you should be talking about with your tax professional, so you can take notes on this. But I'll make no secret of it. In the tax seminar that I've got coming up, I am going to tell you how to do these things. And so what's important is to know, well, what is it that I need to know? What should I be asking? I think you'll get this out of that today. Now, if you're watching this after December 13th, the seminar that I have put together, I'll be doing them after this, but this will be worth you watching this video nonetheless, because I will be telling you what I just indicated, what you need to be addressing. I'm also going to be coming out with a members only section of my YouTube channel, and I will be putting in there how to go about this. It won't be as beneficial to just listen to this without talking to your tax professionals, okay? You need to talk with your tax professional, your CPAs, your EAs. I know a lot of those that are tuning into YouTube, like me, you're trying to figure stuff out on your own, if you will. But remember, when you have a toothache, you go to the dentist. When you need something sewn up, little stitches, you're going to go to the doctor. Typically, there are some things you can do at home, and you want to have your hands around this. One of the things that makes my clients experience a full effect of tax planning, tax strategizing, is they don't just say, well, JJ, just tell me what to do. JJ, whatever, you handle it. That's not how that works. It works by being hand in hand, if you will, with your tax professionals related to what you're doing, lawyers, bankers, investment advisors, insurance professionals, etc. If you just say, hey, you handle it, Roy, as my dad would say, it's not going to get done right. You can hire the most expertise, spend $2,000 an hour, but if you're not involved with it, if you don't know the basics, then the plan will only be good as the tax professional, okay, that is interacting with you in terms of the questions that they're asking. So it's a two-way street. I am going to let you know that, and for those of you that might feel compelled to say, hey, JJ, you're not in the center of the video, just know that I did that on purpose. So I've got a book here that you can get on Amazon, JJ the CPA here, top 60 questions of the last 27 years of practice. Why am I telling you this? It's not about the book. It's not about the seminar. I'm giving you value if you haven't caught on already, which is, and I talk about it in this book over and over and over again, is you have to know fundamentals. You have to know basics. You got to ask questions. You can't wait for your professionals to call you. People that come to me and they're like, well, they never called me. I mean, usually one of the first questions I would ask back when I was taking on new clients is, well, how often did you call them? Did you ever ask them for service? Did you ever ask to meet with them? So I expect a two-way street from my clients. My clients typically, if they're getting ready to step left or right, different from the direction we've already been moving forward, I'm going to get a text or an email or a call. We're going to chat about it a little bit. I'm going to be able to give them advice. Now, if you want to follow along with the list for what you need to be considering, what you need to ask your tax professional, you can go to jjthecpa.com. And you bet I'm wanting you to go to my website, okay? Probably other people, they don't think you're smart and they're going to trick you into going to a website. Now know this, you're not going to send me your email to then get this list. And this isn't a magic list. It's not a secret list, okay? There's no magic and there's no secrets. All it is once you're aware of something, then you're aware of it. Before you're aware of it, anything would be a secret. How do you open that door? It's a secret. Oh, here's the key. Oh, no secret anymore. I got it solved. But nonetheless, you can go to jjthecpa.com. You'll see that I've got a page called Tax Seminar. You'll see a link that says sign up here for Tax Seminar. You can click on that. You don't sign up if you're on my main page. But anyways, on the seminar page, if you click here to sign up, it'll take you where you can sign up. But on Sunday, I'm going to walk through. It's going to be a 2-hour seminar. I'm going to talk to you about the how of all of this. And I'll have charts and graphs and some notes, an outline, some key details that I'll write out for you so you don't have to make as many notes during the tax planning seminar. And yeah, this video is definitely driven towards those that maybe are really kind of interested in what this tax seminar is all about. Nonetheless, I think you'll get some value. But as I indicated, it'll be 2 hours long. And then once I'm done with the seminar, I'm going to take up to an additional 1 hour to answer as many questions as I can. It'll be all on Zoom. So really, it'll be stretched into a 3-hour seminar, 2 hours of me giving instruction, an hour of questions, unless no one has any. But if you go to that page, what you will see when it says, what can I expect from the seminar session? Okay. What that's telling you is here's the list that you need to talk to your tax professional about. All the things that I'm going to be talking about in this tax seminar is what you should be talking to your tax professional about. Now, it is $97 for the 2 hours plus an hour of questions. I don't know if you'll be able to have time to spend all of that. So what I've done is that if you can't stay for the whole thing, those that attend, I'm going to send them a link, a private link to the seminar plus the questions, and you'll be able to watch that through January 16th. It's just included in the fee. So even if you can't make it on Sunday, the 13th of December at 3 p.m. Central Standard Time, you can still sign up for the seminar, and then I'll send you a link to the video, which again is going to go through the how. Now, for those of you that were looking for, all right, well, I'm not going to do the seminar, JJ, get on with it. Well, remember this, you're getting this for free. So the first thing you want to address with your tax professional ASAP, you can't wait for a meeting, ASAP, is reach out to them and say, hey, I got PPP, and tell them if you filed a Schedule C or a Schedule F. Tell them if you're an employer, okay, and say, hey, I got PPP, here's the amount. If I get it all forgiven, what's my tax adjustment? Now, I'm going to go ahead and tell you this. For the Schedule C filer, self-employed, the tax adjustment, there is none for you. Okay, it's just tax-free. How? Check with your professional. I'll walk through it in the seminar. PPP tax adjustment, though, for the employer. For those that got PPP and it's getting forgiven and it was used for expenses, you're not going to be able to tax deduct those expenses as it stands right now. It is December, let's see, it's almost midnight, December 6th, though we'll call it December 7th when this finally gets posted. But the IRS right now has said very clearly in a revenue notice, a revenue ruling, and a revenue procedure that whatever gets forgiven for the employer, you will reduce down your expenses. What does that really mean? It's going to increase your net income. In essence, you know, it creates a tax liability when you haven't been counting on it. So I'm going to talk with you during the seminar on not just that, but like, okay, well, then how do we combat that? And I don't mean argue with the IRS about whether or not you can not make the tax adjustment. You will be making the tax adjustment, okay? You will. But now what can we do about it? What can we combat it? And guess what? The rest of the seminar will be doing just that. So what you want to do is run through with your tax professional kind of the basics of what you need to do to create your year-end tax plan. What is the tax plan? Well, as I indicate here, okay, what is it that you can deduct? right? So get with your tax professional and say, okay, hey, what can I deduct between now and the end of the year? Okay, because really, you can deduct anything under the sun, under Code Section 162, but how? How does it apply to you? And then when you're talking about your wages and the withholdings, if you have any, your tax estimates, getting those taxes paid in, you want to know what your effective tax rate is. Ask your tax professional what your effective tax rate is. If they don't know for the current year because you haven't given them any information, then ask them what it was for the prior year, or pull your tax return out and figure out what your effective tax rate is, which I'll walk through in the seminar. But the effective tax rate is, okay, I earned this much income. Here's was my tax, right? You divide it out, but what's my effective tax rate on my wages, on my interest and my dividends and my investment income and the net income from my business and self-employment taxes? Why is that important? Because if you know your effective tax rate, then you know what the tax deductions are going to save you. Because I said to you, ask them, what should I be doing before year end? What should I tax deduct? Great, you're going to have that list, but then you need to know, but how much is that going to save me? So if you come up with $1,000 worth of deductions and your effective income tax rate is 25%, well, it's going to save you $250. If you're self-employed, and I'm going to walk through the top 12 deductions for the self-employed, but if you're self-employed, okay, your income tax rate may be 25%, the effective one, but you have, in addition to that, 15.3% tax. Okay, that's like over 40% in taxes before you even get to the state. So if you're self-employed and you come up with $1,000 tax deduction for the self-employed, when you take the individual income tax rate and the 15.3% self-employed tax rate, right, that 40%, a tax deduction of $1,000 is going to save you $400. Now, I'll just tell you this right now, okay? I'm going to use a few voices. CSR would like this. A few of the old timers that have been around. CSR is not an old timer, but old timers that have been watching since the beginning of time, you know, especially when I was doing videos late, I'd have a lot of voices. But anyways, I know there's going to be like, whoa, 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 JJ, whoa, you're telling people to go spend $1,000. They're only going to save $400. Yeah, right. I've never told a client, hey, go spend $1,000. But see why it's important that you know these two things. What can you deduct and what's your effective tax rate? So you know what it is that you're going to save to figure out if it's even worth it. So with my clients, it really comes down to this. You could stop right after this next maybe minute. Here's what I tell clients. What is it that you can deduct before the end of the year? Here's your effective tax rate. Okay? So what is it that you need between now and the end of the following year when we're talking about year-end tax planning? And does it make sense to get it now before year-end to save you the tax of this little calculation I just provide you? Okay? So you don't even have to listen past here. I've right there in a nutshell, it's what I'm going to cover in the whole seminar is if you know what you can tax deduct, you know what your effective tax rate is, and then you sit down and you go, okay, well, what is it that I'm going to spend between now and the end of next year? If I spend it now, what's it going to save me? So for the self-employed, you're like, well, I don't really have anything now, but you know, in January, I have this $1,000 expense coming up. So if I pay it by the end of the year, then it's going to save me $400. Yes. So with my clients, I basically say, hey, here's what your April 15th is going to look like. Here's your effective tax rate. Here's some things that you can tax deduct. And so if you do these things now, then this is what April 15th could look like. Boom, mic drop. That's tax planning. That's tax strategies. It's knowing these things. Now, for those of you that you want your one and done, thanks for joining me. I'd love it if you'd subscribe. Video's not over, but tune in for other year-end tax planning videos that I'll be putting out. They're really not going to be in the detail that I'm going to put into this Zoom. But with that being said, you also want to look at asking your tax professional for your individual tax returns. What are the things that you should be knowing about in terms of the deducting? Bunching up deductions for your itemized for medical. Whoa, no one makes a medical deduction. Now, there's some people that make medical deductions. Under the new CARES Act, they expanded actually what qualifies for medical expenses, which really expanded it, which I'll talk about, excuse me, in the seminar. But there's a new charitable contribution deduction, not a new charitable contribution, but there's a new deduction that you can take, that you're able to take up to $300 whether you itemize or not. So I'll be talking about that, but ask them about that, because that is something that anybody can take when you're talking about that. And there's a few other things. I'll just throw it out there. Your PMI, you're able to deduct that again. The tuition deduction got extended. There's a number of things out of the Secure Act that I'll address through here. I think there's over 30 things that got extended through the end of this year of the deductions. I'm going to go through the top 8 of those, and then I'll provide the whole list. And then for those of you, now I'm not talking about hanky-panky stuff here, but if you're working from home and you're self-employed, there's an easy way to do your home office deduction that is really going to end up yielding the same amount of deduction that you would if you spent all the time tracking your utilities and the interest and the maintenance, because in over 27 years of practice, I've never seen a home office deduction be much more than about $800-900. Even a mansion, and someone's got this big aspect of their house. It was something I dealt with 20 years ago. Still not going to be a big deduction, but there's a simple way. And I'll just tell you right now, you take your square footage that you're using for your home times $5, and that's your home office deduction. But I'll walk through how you actually go about that and how to make sure that you're legally, qualifying for that. Also, take account, you're going to want to talk with your investment advisor as well as your tax professional potentially, but with capital gains and capital losses, stock sales. So knowing the difference between, what's outside of retirement, what's inside of retirement, and what should I really be doing from tax planning, being more aggressive in your investments that are going to have high growth and that you can sell off at gains. Of course, that's tax deferred in retirement. If it's outside of retirement, year-end tax planning is, do you have a bunch of gains that you maybe weren't aware of? Because if you're in mutual funds, they have what's called capital gain distributions. And so I'll talk about how to get with your investment advisor. Pretty simple. Just say, hey, what are my capital gain distributions? I don't mean that you bought and sold stock. But if you own stock, what are my capital gain distributions? What are my dividends? What are my qualified dividends? And then do I have any REIT dividends? Because one of the things I talk about here, I'm talking about strategies for investment for those that are investors, which can be, you just got an account on E-Trade. But looking at the interest and the dividends as well as these REIT dividends that I'll talk to you about, because 20% of them are not taxable. Now, you're probably, if you're still listening, you're like, yeah, my guys know it. My gal knows it. I've had them forever. They do a good job. Okay, great. They do a good job doing what? Preparing your tax return. Okay, do they do a great job doing tax planning with you? If the answer is no, you know why? Because you haven't called them, right? It's not really the fault of the person that is cleaning your teeth and taking care of your cavities if you get cavities and all your teeth fall out. Okay, it'd be your fault for not going and getting your teeth cleaned. It'd be your fault for not tending to your teeth and getting your cavities filled, right? But what's interesting is in the tax world, the legal world, the investment world, the insurance world, right? Maybe even the banking world. It's like there's an expectation of these professionals. Well, they didn't tell me. Well, they didn't call me, or they don't do any planning with me. Well, that'd be the same as sitting around and say, well, my dentist never calls me. My dentist never cleans my teeth. I don't know if I should clean my teeth or not. I don't know if I should floss. I don't know if I should swoosh around some kind of, liquid that cleans my teeth. Gee golly, what should I do? Of course, I'm having fun, right? But the reason you're not probably getting tax planning and maybe watching this video, which I want you to keep watching, of course, because I want to help you, is that you need to call them. Here's the deal. A little secret is CPAs, okay, EAs, tax professionals, and you know what? I wasn't really expecting to, but I've got this other book, Cracking the CPA Code, and I talk about CPAs, and this is how to do business with a CPA, as in how to get referrals from a CPA. But I do talk about in my other book, like what are some of the things that you do when you're looking to hire a CPA, a EA, a tax professional, if you will, and make sure they're a fit for you. Okay? All CPAs, all EAs, all tax professionals don't do all things, or they shouldn't. Okay? You want someone that's kind of honed in on what your needs are. Okay? So with that being said, the secret I'm going to tell you is that we assume, not me, we assume you don't want to spend money with us. We assume you just want us to do the bare minimum to pay the least amount. And the problem is that they think you wouldn't want to spend on this. It's a $97 tax seminar. They're going to think you don't want to spend $97 doing any tax planning, you know. Okay, well, here's my thought. If you spent $97 with your tax professional, what would you yield out of that in tax savings? How much would you save? It's going to be more. So when I used to have clients like, hey, well, what's this going to cost me and this and that? Fired, out. Okay? Get out. Okay? Now, don't get me wrong. I get it. You definitely want to know, well, what am I getting for the value of what I'm getting ready to pay for? Well, this list that we're going through, if you're on my website, jjthecpa.com, on the tax seminar, this is what you should be doing with your professional right now. This is what you should be paying for. Okay? You get what you pay for, as in if you're expecting to sit down with them and it's like, don't get a bill for it. Okay, well, did they really spend the time that they should have with you? So going through this seminar, going through this video right now is also going to give you a foundation of how to get some ideas to implement yourself, get some ideas to talk with your professional about it. So when we're talking about the itemized deductions, get with them and say, hey, what are my itemized deductions? Better yet, get your tax return out. Look on Schedule A. That's where the itemized deductions are. I'm going to talk about the two most common, really three, but the two most common itemized deductions, how to make sure you're taking advantage of those. But you can look at your Schedule A and see what doesn't have a number on it. That's something you're not taking advantage of, and then ask them about that. When I talk about the top 10 deductions that anybody can take, I'm going to be talking about the new tax law, some things that came out of that, year-end tax strategies for residential real estate owners, and you want to understand, are you a real estate professional? If you're not spending 750 hours legit on real estate, you're not a real estate professional, so stop trying. But what I talk about, though, is that whether you're a real estate professional or not, what are the advantages, disadvantages of the residential real estate? You know, part of it is losses get limited pretty easily, and most people get into residential rental thinking, well, if I have losses, this is good for taxes. Wrong. You don't need to have losses because you don't want losses, because you don't want losses. Losses is, well, shoot, I had a loss. Well, I'm going to get some tax savings out of it. But you don't go create a situation to have a loss and then go, yippee, I had a loss. Because you're only going to save, what did I tell you earlier, maybe 25%, if you're self-employed 40%, which the self-employment tax doesn't apply to the residential real estate. Then for those of you that are in commercial real estate, or you're thinking about getting in commercial real estate, let me tell you this, I'm going to whisper sweet nothings in your ear in this seminar related to commercial real estate. But I'll just tell you this right now, because if you're not going to go to my seminar, I want to make sure you're continuing to get value. But qualified improvement property on commercial real estate, Congress, out of the CARES Act, did a technical correction. You probably read about it. Make sure you understand it. But that used to be 39-year property. It's now 15-year property. Think about this. You're writing it off not over 39, but over 15 years. But better than that, in the new tax law, the qualified improvement property, now that it's 15-year, qualifies for bonus depreciation, which means you get to write off 100% of the qualified improvement property. But there's some things you need to know on how it qualifies. And I'm not going to throw my fellow CPAs, EAs, tax professionals under the bus, if you will. But I teach this course, okay? Not this seminar that I'm putting on, because I put this together for my clients, but I provide seminars on behalf of a group, a nationwide group, to CPAs. It doesn't mean CPAs don't know it or the EAs don't know it, but I'm providing updates. Well, out of the CARES Act that came out back in March, there's an aspect of this. And when I'm going through these tax seminars, there still are a lot of CPAs and EAs and tax professionals getting caught up on it. Because here's the thing. Your professional, your EA, your CPA, they're only human, okay? They only know so much. They probably know this, but you want to know the details. Why? So that you can ask questions about it. You can help the CPA, your EA, your tax professional do what's called a cost segregation analysis. So if you've got commercial real estate and you didn't do one when you got it, or if you're getting one or you just got one or you're going to get one, you need to look into doing the cost segregation analysis so that you're able to write off a ton of money. So let me just tell you this. A $500,000 building, commercial real estate building, could be in 1 year, could be $250,000 deduction, right? Go ahead and pull the confetti down. There's confetti coming around everywhere. Now, is it passive? Do you have basis? There's a lot of other things to it, okay? But it all starts with ensuring that you're taking the deductions that you can on the qualified improvement property. So ask, because there's been, for the commercial real estate, we know out of the PATH Act, you break out the roof, the security system, the alarm system, and the HVAC. 39-year property, but you can take Section 179, which allows you to have 100% deduction minute one. However, with Section 179, you can only take it to the extent of the net income of the business. Not a bad thing. It can carry over. The bonus depreciation, okay, comes into play, though, on things that are 20 years or less. So those things I just mentioned to you, as well as the structural portion of a commercial building, is all 39-year, okay? Not going to be able to do bonus depreciation on that. So you want to look at your commercial real estate and break out the things that I just indicated. Also, then the qualified improvement property, which is non-structural part of the commercial real estate. But you haven't even gotten to sidewalk, okay, the parking lot, signage, ponds, trees, landscaping, right? And then inside the building, you've got structure and non-structure, but then you have lighting and cabinetry and flooring and fixtures and built-in things and all that. All those things need a different class life. Okay, I've given you enough information that you now need to talk with your tax professional. I'm going to walk through that in more detail in this seminar. Major new tax law as it relates to deducting on your vehicle. So I'm going to talk about that. But if you have a vehicle, especially if you have a business, visit with your tax professional about how to deduct your expenses. I'll tell you this, if you have a vehicle owned by your business, the business should be paying the payment, the insurance, the tax, the car washes, the repairs, the tires, should pay for everything, okay? Now, talk with your tax professional about the vehicle. If you're thinking about buying one with the potential new administration coming in, it's not a political statement. I do think the big, if you made it to here, here's your golden nugget that I'm just dropping right here, is that I think they're going to do away with the one-time hit deduction up front on the vehicles that weigh over 6,000 pounds GVWR. Anyway, so talk to them, talk to your tax professional, your CPA, EA, if you're looking to get a vehicle, especially if you have a business, figure out what the deductions are. Oh, by the way, in the Tax Act that came into play, it's the TCJA that came into play at the beginning of 18. If it's under 6,000 pound GVWR vehicle, which that's an SUV or a heavy truck, if it's under that, if you take bonus depreciation, you can deduct up to $18,000 in the first year. All right. And then, one of the things that I do with clients, especially the first year that they would come on, but really with every client at some point during the year, I'm looking at the tax return. I'm looking at key areas. So ask your EA, CPA, okay? Just say, hey, can I get together, do some tax planning, run through my tax return, okay? If you have a professional that somehow is offended by that, I'd be shocked. They'd love to go through and say, hey, yeah, here's what we did. Here's our work, right? But you want to be aware of some things. There's one key line item for the business owners on Form 1040. I'm not going to remember. It was a different line item in 18. It was a different line item in 19. It'll be a different line item in 20, right? But it's a qualified business income deduction. But in like 30 seconds, you're going to be able to pull that out, go that line and go, is there a number there? Yes, no, no. How come I didn't get that deduction? Yes. Well, did I get the full deduction? I'm going to walk through the parameters of that. So ask how you're able to get the qualified business income deduction related to that. Because that's, and I guess I should have even said this. The qualified business income deduction is a deduction out of thin air where 20% of your net income from your business is not taxable. Okay. There are some phase outs. You got to do some phase ins. Okay. I'm going to walk through that calculation in my seminar, but get with your tax professional to say, hey, what's our anticipated qualified business income deduction this year? Because in essence, it's a huge amount. Now we have to wait on the IRS to know what is the effect on the qualified business income deduction with the PPP tax adjustment, which I will talk through here, as well as how will the PPP forgiveness tax adjustment affect QBI wages, the qualified business income wages, which I'm going to go through on this seminar, because we don't know right now, but it's going to have an effect somehow, but it'll be huge. And then I'll go over it briefly because this really just would apply to S Corp owners and the C Corp owners and the partnerships. But how to properly pay yourself, that sounds funny, but there's a lot of people out there that just have no clue why they're paying themselves what they're paying themselves as an owner. They have no clue. And they're wasting maybe a bunch of payroll tax. And no, I'm not coming up with stuff in this seminar on how to cheat the system. Oh, came up with some secret. No, hogwash. Okay, 27 years. That's me knocking. I've never had a tax adjustment in a tax return that I've prepared. Ever. Never have had an audit tax adjustment. Okay? So I'm not going to give you stuff in this seminar to get you in trouble. It's how to do it right. But anyways, there's a formula to know how do I know what to pay myself. And it's a 60-40 formula. Okay? About what you're pulling out, 60% wages, 40% distribution out of an S. Okay? Now out of a C Corp, a little different because you got dividends that come in. Dividends are taxable. The net income doesn't get to deduct the dividend, so you're paying double taxation on the C Corp. So if you got a C Corp, you definitely want to talk to your tax professional, revisit it. Even if you talked about it last year or 2 years ago or 3 years ago, every year I visit with my clients about their compensation, as in their wages. Now, of course, the compensation is going to be based on, well, how well did you do and how much money do you have in the account? Okay. But then what's the next step, right? And what's the tax that you could be wasting? Social Security, Medicare tax. Okay. So talk with them. Also, I'm not afraid of the IRS. And I don't even mean that in a, well, bring it on, son. No, I'm just saying that the IRS is like a referee. When we were kids and we went up to the plate, playing t-ball, or if we were kicking the soccer ball around, and here's a referee or here's an umpire, we didn't start peeing down our leg and like, oh my gosh, there's the umpire. What if they look at me? What if they ask me a question? Okay, that's what the IRS is. It's an umpire. It's a referee. Okay, I've never had a bad experience with the IRS or with an agent. Okay, now part of it is because I treat them the way I want to be treated. Nonetheless, there are some flags. The IRS just announced a couple of areas that they're doubling their efforts in the kind of audits that they're looking for. They've kind of mentioned 3 things. So check with your tax professional so you're not worried about it. One of it is if you're making over $100,000, there's a certain aspect that they're looking at. The IRS is, regarding your filing requirements. The other is if you have a partnership, they're doubling. I guess it's the same. Okay. I told you 3 things. Well, 2 of them are the same, but one of them's on the partnerships, one of them is on the S, but they're doubling their efforts, as in they're going to audit twice as many S corps, twice as many partnerships. But I'll walk through with you why you probably really don't need to be worried about that. Might be a little bit more of a headline there, if you will. And then I am going to talk through some of the things I talk about in my book, but a good fit for you. So to have a good fit for you as a tax professional, first of all, is just somebody you feel comfortable with. If you feel like an idiot when you ask them questions, first of all, it might be because you need to go to counseling because you somehow feel like asking somebody a question that you don't know the answer to makes you look like an idiot. But I will tell you this, I don't have any clients that need to go to counseling before they come and talk with me because I don't make them feel like an idiot. So don't get me wrong. I doubt it's your problem. Okay. So I'm having a little fun there. I went through counseling starting when I was 17 and I've been in counseling off and on up until maybe 2 years ago. I think counseling's great. So I can joke about it. But at the end of the day, my point is that if you don't feel comfortable, confident asking questions, then find someone else that you do, right? Who do you feel comfortable with? Don't go with, well, there's a CPA and this one's an EA. I don't know who's going to know more. This is a tax professional. It starts with, well, how many years of experience do they have? Do they do it year round? Do they do this often? Did they just show up? Hey, yeah, I know what a 1040 is. I can help you prepare that. Right? Did they just do it on the weekends? Not to say that somebody doing it on the weekends for the last 30 years doesn't know what they're doing, but someone who's doing it on the weekends starting during the pandemic may not be a good fit for you. Okay, so when you're like, hey, how much is it going to cost? Wrong question to ask. Talk about it in here, and I'll talk about it in the seminar. But at least start with that, okay? Ask questions, okay? The person that just goes, done, sign there, send in a check. Boy, if you think they're doing you a good job, maybe. How do you know, though? How do you know? All right, so ask them also out of the CARES Act. There's too much to go through. The video's getting too long. The CARES Act, the Family First Coronavirus Relief Act. We have the TCJA. We have the Secures Act. There was a Disaster Act. 5 acts in the last not even 36 months. And 4 of those are in the last year. 2 of those are in the last 6 to 9 months. So I'm going to go through and do some updates related to that. Out of this, I'm just going to give 3 considerations related to estate planning. The gift tax exemptions, $15,000 a year per person. So I'm just going to give you in this seminar like 3 things to know about that, how to easily implement it. But you just talk with your tax professional about doing some of that to get it out of your estate. It's not a tax deduction to you to gift to somebody. I'm not talking about to charity. And it's not taxable to the one that received it if it's $15,000 or less. But, a married couple, right, could each give their kid, okay, each $15,000, which is 30. And there's a couple of things related to 529 plans, an ABLE account, where parents and grandparents can load up on these things. Some of it has a deduction at the state level. Nonetheless, I'm going to also just talk about my concern with the estate tax exemption being reduced sooner rather than later, and maybe what we should do about that. And then I came up on my own. I'm wrapping up here. I came up on my own that I go through with my clients a 10, 20, 30-year tax plan. It's on one sheet. And I don't give it out to anybody. In this seminar, you're going to get a copy of it. And I'll ask that you don't give it to anybody. I'm being dead serious. I ask that you do not give it to anybody. You're going to get it because you're going to be in my tax seminar. This little thing right here, and I'm also going to talk about tax diversification, which a lot of investment advisors kind of miss this part. They kind of feel like it's outside of maybe what they're supposed to worry about. But I'll show you why you would want to present this pie chart that I'm going to give you. It's a simple pie chart, okay? It's got 4 sections. It's not a big secret, right? But I'm just saying I'm going to give you this pie chart. I'm going to explain it to you, this tax diversification, to then talk to your investment advisor about it, because hopefully you're at least visiting with them once a year. And the tax diversification is not about necessarily now. It's about the long term, because we all talk about portfolio diversification, right? A little bit in foreign, big cap, small cap, blue chip, blah, 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 blah. Yeah, that's all good and smart, okay? Then you have your risk analysis, right? You visit with your investment advisor and they're like, okay, if you're at this age, then you want this risk. And a lot of investment advisors stop there. Now, the 3 that I work with don't. Why? Because we work together. The next step is tax diversification, taking into account what should you be doing inside of, well, I told you earlier, inside of retirement accounts that grow tax deferred, you pull it out tax free unless you're getting into a Roth, or if it's outside. And I will tell you this: if you can get money into your kid's Roth, the sooner the better. Okay, so, and then I'm going to spend in that. I'll probably spend 3 minutes talking about how life insurance can save taxes. I have a life insurance license. I also sell life and disability income insurance only to my clients, and I call it sale. But really, the reason I got into it is that I kind of got tired of life insurance and disability insurance salespeople selling stuff to my clients, and my clients didn't even understand what it was. Anyways, I'm going to talk to you about the tax aspect of that. And guess what? I'm not licensed in your state. I'm not going to sell you life insurance. Definitely don't want to sell you life insurance. I don't want to sell you disability income insurance. So just because you heard those words, don't assume like, oh my gosh, he's going to do what? I talk about it in my book. Okay, so if you're not going to take my seminar, the $97 seminar, then you can read my book. Okay, this is $19.97, I think, on Amazon, and I talk a lot in there about the life insurance. I can't sell you any, so I'm not telling you any concepts. So you'll call me and and want me to sell you some, because I can't and I won't. So anyways, and then I'll have Q&A in the seminar. So really what it comes down to is that you need to communicate with your tax professionals and do it now, right now. Send an email. Hey, when can we get together? When can we have a phone call? You don't really have to get together per se to get the ball rolling. Just say, hey, and don't just say, hey, is there anything I should be doing? And be like, well, usually what I would say to somebody, okay, I know my clients, so I'm calling them before they call me, but you can just say, hey, listen, I've got my pay stub, or I've got my most recent P&L. I've got my statements from my investment advisors where I'm at. I'm going to send these to you. I'd like you to compare to the prior year, and I'd like to have a phone conference with you to get some ideas about what I should do between now and the end of the year. So if you can at least just look at what I'm putting together and last year's information enough for us to have a good conversation, that'd be great. I don't know that you need to say, so do me a tax estimate. Have a phone call with them, 5 minutes, 10 minutes. You're just sending them a little bit of info. You're asking them to look at last year's stuff. Hey, here's some new info, or here's my current info. Will you look at last year, compare it, and then can we have a quick phone call? And you can even just say in there, hey, don't worry about doing anything, formally. I just want to let you know, here's some information. I'd like to have a phone call with you for 5 or 10 minutes. Expect to pay for it. Now, I don't charge my clients for 5 or 10 minute phone calls, mostly because I'm talking to them longer than that. But if I just have a quick phone call, but visit with them, see what's up, okay? And then if you find that you're not satisfied, it's kind of too late to find somebody new, maybe. Okay. Back when I was taking on new clients, I didn't take on new clients after December 1st. But if you're not happy with the response, you're not happy with the information, whatever the case is, don't just fire them. Okay. Call them back. Say, hey, I wasn't really happy with the information. Now, if you're going to be a jerk about it, well, you're going to be on the list, right? But, let them know. Just say, hey, I know it's busy and this and that. I just want to follow up. I don't feel like I'm getting what I wanted. Oh, okay. If you still don't get a good response. But you could ask around, right? You can ask around. So know this, when somebody comes into my office And I haven't taken on new clients since the fall of 2018. I'm doing a number of other things. I still have over 1,000 clients that I'm working with. But nonetheless, when people would come in and they'd say, well, hey, I'm not really happy with who I was with. They didn't seem to do any planning. They never called me. They didn't provide me any information. I always say, okay, well, what did you do though? Like, what do you mean? I was like, well, did you ever call them? Well, no. Well, I mean, did you ever let them know anything new that was going on and get their advice? Well, no. When did you usually give them your information? Now, of course, we all know the stories of people that procrastinate, as in the professionals in any profession. Point is I ask those questions first, right? And now if they said, yeah, we got it in February, we never got our stuff back till October, I'd call and it'd be 2 weeks, whatever the case is, or they didn't seem to care, or I'd ask for ideas and they never gave me any, right? Then start looking around. Best place to do is not just an announcement on Facebook, right, that your professional may see. That's kind of not really, in my opinion, a way to go about it. But ask people who are in your industry or in your line of work, like, well, hey, who do you use? Who do you use? But this would be the time to talk to them. You may not get in. You may not be able to get an appointment with them, especially before the year end. But this might be the time to say, hey, I'd like to hire you. And you can ask the questions that I indicate here in this book, which is, are you taking on new clients? And then there's 2 main questions that are in that book. I'll leave it at that. All right. Hey, thanks for tuning in. I'd love it if you subscribe. And for those of you that made it all the way to here, jjthecpa.com/tax seminar. Got a link right in the body of this video. And I also list out in the body of this video everything that I'll be covering, which was right here from the website. All right. Hey, thanks for tuning in. Love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Thanks for tuning in. Hope to see you at the seminar. And once I do the seminar, when it wraps up, remember, if you can't make it or you can't stay for the whole thing, or even if you're there for every last minute, I'm going to send you a link to the seminar. It's a private link that you'll be able to refer back to it through January 16th. All right. Thanks for tuning in.